two events in the world are threatening the global stock market right now that almost nobody is talking about. So from 1st December 2025, the US Federal Reserve ends quantitative tightening and will start printing money again. Now in the past, every time the Fed has printed money, be it 2008, 2020, the dot-com crash, assets were cheap and the economy was struggling and inflation was low. They were stimulating into a depression. Today, it is the exact opposite. Stocks are at record highs. Unemployment and inflation in the US both are under control, and at the same time, many believe that AI stocks are already in a bubble territory. So the US is going to be printing money into a bubble. What happens next? Liquidity absolutely floods the market. Tech, AI and growth stocks melt up as money chases returns because that liquidity has to be invested somewhere. Gold and other hard assets also tend to rally. And then, with a lag, inflation comes back. The Fed is forced to tighten aggressively, and that's when the bubble pops. At the same time, Japanese bond yields have been going up and are hitting record levels. So the cheap money borrowed from Japan used to invest across the world into different assets could also dry up if yields continue to go up. Though this is not an immediate risk, that can coincide with the US money printing led inflation coming back to the US in the near future. Here's what I'm tracking to spot cracks in the market. US inflation and wage data, long-term US and Japanese bond yields, how the yen is moving, and signs of credit stress. Not just in listed bonds, but in private credit as well.